Welcome to The Explainer. Okay, today we are diving deep into the Genius Act. This is a brand new law that's setting the first ever federal rules for a new kind of digital money. It's got this huge promise of bringing both innovation and safety. But as you're about to see, some critics are warning it might just leave consumers dangerously exposed.
So to really get what's at stake here, you have to start with this number: the global market for stablecoins. These are digital tokens pegged to the dollar. It's already worth over $200 billion. That's basically a parallel financial system, and it's moving a massive amount of value across the globe every single day.
Right, and with that much money flying around, the stablecoin space has, for a long time, been called the Wild West of finance. I mean, it's this huge, largely unregulated frontier. So for years, the big question hanging over Washington, over Wall Street, has been the same. How do you bring some law and order to this world without totally crushing the innovation that makes it so exciting in the first place?
To get to the answer, we have to be super clear about what exactly we're regulating. The Genius Act is laser-focused on something called payment stablecoins. Just think of it like a digital chip that's always, and I mean always, supposed to be worth exactly $1 because there's a real dollar backing it up. It's built for one main purpose: making payments and making them fast.
Now, this whole push for rules didn't just pop up overnight. It really got kicked into high gear back in 2022. You might remember when a major stablecoin, Terra Luna, blew up, spectacularly, and just vaporized billions of dollars. That shockwave highlighted just how risky this space could be, and it led to something you almost never see in Washington: Democrats and Republicans actually coming together to draft the Genius Act. And what do you know? It eventually passed the Senate with really strong bipartisan support. So what came out of all that work is the Guiding and Establishing National Innovation for U.S. Stablecoins Act, or, the much catchier Genius Act. This thing is the first ever federal rulebook for payment stablecoins. It's basically the new sheriff in this digital town. And here's where it gets really interesting. The act sets up this unique two-track system for getting regulated. If you're a big player, an issuer with over $10 billion, or a bank, you're supervised at the federal level by the Fed or the OCC. But if you're a smaller, more nimble startup, you can actually get licensed at the state level. It creates a real pathway for new players to get in the game, as long as their state's rules meet the tough new federal standards.
So, what are these new ground rules? Well, under the Act, it doesn't matter if you're big or small, everyone has to play by the same core set of rules. First, for every single digital dollar you issue, you have to hold $1 in high-quality reserves. Think cash or short-term government bonds. Second, you have to publicly report what's in those reserves every single month. And finally, you have to fully comply with all the anti-money laundering and know your customer laws that your local bank has to follow.
This all sounds pretty good, right? You've got clear rules, safe reserves. What's not to like? But, and this is a big but, this is where the plot really thickens. The central debate raging around the Genius Act is whether these new rules are actually strong enough to protect people, or if there are some really dangerous gaps.
And this table really lays out that central tug-of-war. For every new protection the law puts in place, critics are quick to point out a potential loophole. Sure, it requires one-to-one backing, but they argue that even high-quality assets can drop in value during a market panic. It requires monthly reports, but hey, that's not real-time proof, is it? But the biggest bone of contention is all about fraud protection.
This is where groups like Consumer Reports are really sounding the alarm. What they're pointing out is that the Genius Act doesn't give you, the stablecoin user, the same kind of fraud protections you get with your debit card or your credit card. So if your stablecoin wallet gets hacked or you get scammed, there's no law on the books that guarantees you'll get your money back. That's a huge difference from traditional banking. Now, setting that whole debate aside for a second, this law is going to make huge waves across the entire financial industry, no matter what, and its impact is going to be felt way beyond just the crypto world. You have to remember, before this act, issuing a stablecoin was, legally speaking, kind of murky. Now, the floodgates are wide open. We're talking traditional banks, credit unions, huge fintech companies, like a PayPal or maybe even an Amazon. They all now have a clear legal runway to create their own digital dollars. The race has officially begun. And this isn't just a domestic issue either. This law is all about how the US stacks up against the rest of the world. The European Union, for example, has its own big framework called MiCA. Places like Hong Kong have their own super strict rules. The American approach with this dual federal state system is pretty unique. Supporters say it offers more flexibility and that it'll convince more innovators to come build their products on top of the US dollar.
And that brings us to the real bottom line here. This is about way more than just regulating a new piece of tech. By creating what could be the world's clearest, most attractive rulebook for US dollar-backed stablecoins, the Genius Act is really a strategic play. It's a move to make sure that as finance goes digital, the US dollar stays king of the hill.
So there you have it, the Genius Act. It sets the stage for a new wave of innovation, and it's aiming to lock in the dollar's future. But it leaves us with this massive hanging question. Did Congress thread the needle perfectly here, balancing breakthrough tech with the absolute need to protect everyday people? Or, in the rush to get rules on the books, did they accidentally overlook the very risks that could spark the next big crisis? The answer is going to shape the future of money for all of us.